This week's Livestock, Dairy, and Poultry Outlook says higher milk production per cow will raise dairy production in 2012. Live hog prices are expected to average $63 to $67, almost 2% below 2011. And on the cattle side, exports for last year are expected to be up 21% year over year, and 2012 should be near the same level. When we talked with Mike Briggs on Wednesday, rains in South America had a hold on grain prices, which I told him had to be good news for people like Mike.
You know, we've taken 50-60 cents out of this corn just since the crop report last week, and any more rain like that, that's going to help stabilize that crop down there. I think there's damage down there, but so long as they keep getting rain, it's going to put a bottom under that grain crop size, and I think it's just going to be beneficial for us as we go forward.
You know, a bit of foreshadowing. The last time we were here, you said that because of wheat substitution and maybe exports, maybe there would be a little more cattle or more corn around than people thought. And the USDA said, "God, we love."
Well, they raised. Yeah, I'm sure that's what they did. You know, the corn crop was better because the test weights were better. I kind of heard some things right before the report about kernel size and test weight, and that adds a lot to your yield. So the yield was actually raised and not lowered. And then, of course, exports aren't very good, and I don't think they will be. So that really takes the heat off of us. I think we're going to have big acres in the spring, provided we don't have a weather problem here. Yeah. I think corn doesn't really get a chance to get away from us here and will eventually go down. But that, you know, we haven't even taken the seed out of the bag yet. A lot of guys don't even have seed yet, so that's putting the cart before the horse there. But at least for right now, it's taking the heat off of us.
A little bit brutal today, and yesterday was a little chilly as well, but performance otherwise has to be extraordinary.
Performance is outstanding. As you can see from behind me, the yards are dry, the cattle are clean. This is great. This has been the best winter I can imagine. What that does for the cattle market is good too, because the cattle get done faster, so we're staying current as a feeder, and that's really good for us in the feed yards, because not to get behind on cattle and get the cattle too big, so that really works out well for us.
We've kept an eye on packer margins for the last 3 months here, and they're starting to take it in the chin yet again. And at what point do they say, you know, this isn't much fun for us anymore?
I don't know, because they're always so concerned about losing market share. I don't understand their business well enough, but they're so concerned about losing market share that they'll just keep killing cattle. But at some point, you would think they would slow the chains down enough and say, look, beef's got to go up. I can't lose money at this rate. And maybe they will, but they're going to have, some of that's going to happen for them whether they like it or not, because once we get through, the market knew there was a little swell of cattle here in January. Once we get through that, there's nothing behind these till we get into calves end of April. So it's going to be a pretty tough stretch for them, I imagine.
But for people buying feeders, I mean, positive right now?
Wow. You know, after the corn report last week and the corn going down and the cash cattle going up, the feeder market's just gone nuts. Anything that's been run by me this week is an over $100 loser. I don't believe there's that much coming this market, so I'm not getting in. So I wonder what that does to your placements. I think that'll slow your placement rate down a little bit, but that just puts more pressure out front for the market to go again, because there's not going to be any cattle on feed.
Yeah, when we look at price spreads, and we'll get that report I think Thursday or Friday, but you're really seeing it take it on the chin in that regard too at the grocery store, maybe over $5 now, well over $5 here. What do you think about resiliency in the customer?
You know, that's going to be the interesting thing, and I don't think the customer resiliency in the United States is that good, but our government has the policy of having a cheap dollar. Exports are tremendous. I don't expect that to change. So I think that's always going to be there. If we ever get this economy going without dramatically raising energy prices, which we probably will, you know, I think you'll see that consumer loosen up. Any restaurant I go to, they're always full. So it's going to be interesting to see what that consumer does, because beef is going to eventually get really high.
And in those price spreads released Thursday, choice beef rose 1.5 cents from the $5 mark it hit in November, and pork fell 5 cents to $3.46.1 per pound. Next week, we'll take a look at wheat markets with North Dakota State University Extension economist Frayne Olson.